Hello and welcome back to Lipper's Fund Flows Report. I'm Jeff Turnhoy. For the weekend of September 18th, 2013, the conventional mutual funds industry saw fairly moderate activity, which was not the case with ETFs. Let's take a look at our mutual fund macro groups and see where the activity was. Starting off at the top, we can see that equity and taxable bond funds had fairly good activity, about $2 billion each. Municipal debt funds continued to bleed assets, about $1 billion this week, and money market funds saw very light activity. Although we're calling it $200 million, it was probably just closer to flat. Well, the big news this week was twofold. One, that potential Fed candidate Lawrence Summers took his name out of contention, and as well, the Fed decided at its recent meeting that it was not going to taper. This came as a shock to a lot of people, and markets jumped on the news. For those of us who can recall the Fed coming out about a year ago with the Evans rule, it seemed a little bit of a surprise that people took the talk of tapering so seriously back in May, but we had our first meeting and nothing was changed, so markets jumped on that news. If we take a look at equity funds, we can see what happened here. Now, the market for equity funds jumped about 1.2% this week. That's a pretty good move in any way you look at it. News out of Syria had seemed to calm down a little bit. The best activity this week continued to be in international multi-cap core funds. They took in about $700 million. At the other end, of course, large caps as a group, all three of our USDE classifications for large cap had outflows of about $700 million. So investors continue to be unpersuaded by large caps, and certainly with no tapering going on this week, the real news was just that the risk-on attitude was back in style. So if we turn our attention now to activity in equity ETFs, this was a very different group. They had about $15.5 billion in inflows this week. It was a huge week for a number of funds out there. Obviously, SPY is going to get the lion's share of activity. They took in about $6 billion this week. But also MSCI Emerging Markets, EEM, they took in about 1.7. The Russell 2K ETF, which is IWM, it had about $1.4 billion in net inflows. At the other end of the spectrum, we saw, perhaps some different attitudes out there. GLD for one, as well as DIA, which might have been an arbitrage opportunity for somebody. They had outflows, about $200 to $300 million among those. Some kind of surprising news this week: Alerian MLP ETF. It had about $500 million in outflows. Not only was that the worst one this week, but that represents about 40% of that ETF's assets. So in the space of a few days, it went from about $1.2 billion in assets to about $700 million. We'll keep our eye on that one to see if anything significant comes of it. The next group to turn our attention to is taxable bond mutual funds. As we mentioned earlier, they had inflows of about $1.6 billion this week. They had about 2 weeks so far of positive market performance, so that might be getting some investors back into fixed income investing. Loans, of course, were the lion's share of the flows this week. They took in about $1.1 billion. Intermediate investment grade, which has the typical Barclays aggregate bonds in it, had about $900 million in outflows. People continue to extract money from their core fixed income, looking for more interesting places to put it to work, and so far loan participation has been that place. If we turn our attention, though, to fixed income ETFs, we get a little different response here. Investors this week, despite the talk of tapering being postponed, decided to yank money from fixed income ETFs. And of course, they haven't been all that popular lately anyway, but with $200 million in outflows, it's a little bit different from what everybody else was doing. The usual suspects this week took in money or lost assets as well. HYG saw inflows of about $400 million. BKLN and J&K also had inflows, about $200 million each. LQD, on the other hand, saw outflows, we'll call it about $200 million. And other Treasury-related products, TIPS products, also had outflows this week as investors kind of pulled back from those Treasury products on the ETF side at least. Well, one group that has not had a good week in a long time is municipal debt funds. Again, with about $1 billion in outflows this week, it's not looking good for them. On the other hand, it is better than what they had last week. We saw outflows dive by about half, which is not too bad. So maybe things are starting to look up. One reason why things are looking up is that the forward-looking issuance calendar is very, very light. Although retail investors play a critical role in the sale of municipal debt, insurance companies and other institutions do as well. They still need to fill up their inventory and their balance sheets with municipal debt. They probably looked at the light calendar out there and said, hey, we still have to buy into this. So as a consequence, market was up about 1.2% on municipal debt funds. Maybe that's the sort of trigger or impetus to get people back into municipal debt mutual funds. Overall, though, not much activity here, with the exception of high-yield municipal debt funds. They actually had inflows this week, about $200 million. With that risk-on attitude, that might be an inflection point for this market. We'll have to wait and see what happens, but definitely inflows into any part of municipal debt funds are interesting these days. The final group to take a look at is money market funds. They had about $200 million in net outflows. This was divided into two attitudes. On the one side, we saw institutional investors add about $3.2 billion to their cash accounts, while retail investors may be getting excited about equity, fixed income, potentially some munis one day. They ended up pulling money out of off the sidelines. They pulled about $3.4 billion from their money market funds. So not a whole lot of activity on the money market side. We'll have to see if investors are really going to put more money to work in the coming weeks, because overall it was a fairly light week of activity, save for those very popular equity ETFs. Well, if you'd like more information, please check out our website at lipperusfundflows.com, and please join us next week, where we'll also review ETF and mutual fund flows activity. Thank you.